Did you know that building good credit early can help you save thousands later in life? In this video, we'll explore some simple steps college students can take to start establishing a positive credit history and set themselves up for financial success after graduation. Start with a secured credit card. For most students just now venturing into credit, a great first step is applying for a secured credit card. With a secured card, you provide a cash deposit, usually $200 to $300, which becomes your credit limit. The money is held in a secured account and used as collateral if you fail to pay back your credit charges. This lower risk approach makes secured cards easier for those new to credit to get approved for. As long as you use it modestly, keeping your credit utilization under 30%, and pay on time each month, it allows you into the credit scoring system. Within a few billing cycles, responsible use of a secured card can produce your first reportable accounts and establish positive payment history. Having even basic credit lines open before graduating sets a foundational baseline of creditworthiness earlier than starting from nothing after college. While secured cards typically have higher interest rates and fewer rewards than unsecured cards, their importance in credit building outweighs those small drawbacks for newcomers to credit. Shop around for student or starter secured cards with no annual fees that suit your anticipated spending needs. Opt for one from a major card network like Visa, MasterCard, Discover, or Amex. This ensures their activity will be accurately reported to all three major credit bureaus monthly. Building credit with a widely accepted network early on also boosts approval odds for future unsecured cards down the road. Once 6 to 12 months of on-time payments with low credit utilization are shown, the issuing banks may graduate the account to an unsecured status, keeping your original credit line and history intact. This first taste of credit responsibility lays a crucial foundation for more lending opportunities yet to come. Open a student credit card. For college students with no previous credit history, another smart early option is applying for a credit card tailored specifically for students. Unlike secured cards, student credit cards don't require a security deposit, yet have a similar goal of helping new borrowers enter the credit arena. These cards usually come with lower credit limits of $500 to $1,000 at first, but carry less risk for the issuer since most check enrollment verification services to confirm applicants are actively enrolled in a degree program. Like secured cards, responsible usage of a student credit line for 6 to 12 months can be the launchpad to jumpstart credit documents. Some notable student credit cards available include Discover It for Students, Capital One Platinum Student Cards, Bank of America Travel Rewards Credit Card for Students, and the Citibank Student Card. With the right card, student benefits can include incentives, 0% intro APR periods, and rewards suited for everyday student spending. Perks like cell phone protection or travel accident insurance are also common. Most importantly, any student card used responsibly reports continually to all major credit bureaus. This ongoing documentation of on-time payments month after month is gold for credit scores. A student card treated properly, paid down in full each month, is a straightforward path to first credit files. Once college is complete, graduated accounts transitioning to traditional rewards cards preserve the open date and credit history already in place. Student or secured cards, with care and time, can become the early training wheels credit needs to gain traction through college years. Adding authorized user status. If you have a parent, guardian, or family member with an established credit history, another excellent way to get started building your own credit as a student is by being added as an authorized user to one of their credit cards. An authorized user is someone allowed by the primary account holder to use and charge purchases to an existing credit card, but has no legal responsibility for repaying any accrued balances or charges made. However, being added does allow an authorized user's credit reports to reflect the payment history and revolving credit balances on that card as if it were their own. This can provide an opportunity for students to inherit some of the credit worthiness earned on that older account. Choose a family member with a record of on-time payments over many years and low credit utilization for maximum boost. Experts recommend asking to be added to the oldest credit line shown on a relative's reports. Once added, it may take 1 to 2 statement cycles to begin reflecting, but is an easy way to establish an active payment track record from the start without actually opening new credit yourself quite yet. Authorized user status can supplement other credit building options well, helping round out early years in the credit scoring system faster. Just be mindful that any delinquencies or defaults on the shared account could also negatively affect an authorized user's records. Make credit building a priority. While college may seem like a carefree time best spent focusing solely on academics and fun, strategically carving out effort toward regular credit maintenance shouldn't be neglected. Setting aside just 30 minutes each month for credit matters makes a difference. Consistently logging into online credit card accounts or mobile apps, reviewing statements for accuracy and ensuring autopay is enabled helps reinforce responsible habits. Most responsible users pay off at least the full minimum payment, if not the entire current balance each cycle to avoid interest charges. Making this a priority behavior from the get-go is key to establishing positive credit patterns to last a lifetime. Checking annual credit reports and scores available for free from each bureau can also keep fingers on the credit pulse and detect any irregularities early if they arise. Monitoring alerts from secured cards or other accounts helps catch signs of potential identity fraud as another layer of protection. Opting into credit monitoring or the use of technology solutions that scan public records and proprietary databases for changes daily assists. While not mandatory, taking the small amount of time to stay on top of credit matters and address issues when minimal rather than letting them escalate is invaluable for credit newbies. Making proactive credit care as ingrained as paying tuition strengthens long-term money management skills. Think before applying for more credit. Building credit takes patience as most scoring models want to see consistent, responsible use of any open account's extended limits for at least 6 months before real factored impact is seen. Resist overwhelming new files too quickly by opening excessive accounts all at once. While the temptation to apply for every student or secured card available exists, too many applications and recently opened trade lines also comes across negatively in some FICO scoring versions. Apply mainly for accounts truly needed and practical for a student lifestyle budget. Multiple applications become old credit inquiries that need time to age, leaving fewer open date trad lines to positively contribute to overall credit age. Additionally, starting off with many accounts but only using one frequently may damage an average credit utilization ratio depending how limits are distributed between cards. Having 5 $1,000 limits but only using a single card means 20% is reported across all despite low spending monthly. Waiting 8 to 12 months between major applications allows ample time for each new account to stabilize reporting and optimize its potential impact. Rushing credit growth too aggressively often backfires and delays progress. Patience allows what lines opened already to strengthen scores naturally in a sustainable way. Credit is earned over months and years, not weeks or days, so thinking long-term best serves developing files. If you found this helpful, be sure to like, comment, and subscribe for more personal finance tips. Also, share this video with other college students looking to build their credit.